After I did my video, which is called Why I'm Buying the Dip on Big Tech, I got a lot of questions around Google, or Alphabet, I should say. Google is down over 15.5% on the month. I got a lot of questions around the antitrust lawsuit that they lost, and many things around earnings, valuations, and many different things. And when I did say that I'm buying the dip on Big Tech, and I did say my favorite ones are Amazon and Meta, but Google, I think it's also offering tremendous value at this price. And yes, big tech can go lower. Yes, we could have a stock market crash, but I never really buy stocks just because I believe the stock will go up. I mainly buy stocks based on fundamentals. And if I believe I'm getting value for my money, and for me, Google, Amazon, and these stocks are offering value for my money, and that's why I'm buying some of them. But for Google, in terms of the last earnings report, they did very well. Pretty good beat, $1.89 versus $1.84. It wasn't too bad at all. They also did a small beat on revenue. 84.74 versus 84.19. Very good. It was very good stuff. In terms of YouTube advertising, they did miss on it a little bit, but not a major miss. Google Cloud, also a slight beat. So it wasn't too bad in terms of earning. One thing that was a little bit concerning was mainly quarter on quarter in terms of revenue growth. Google has a history that once it starts declining, it declines a lot. And it happened over here, and it happened over here. And once it starts increasing slightly, then it just shoots up. But once it starts making lower lows, it peaks, and then it just starts going down. I think this is one of the concerns the market has. It went from 15 to 14%. 14% is still high for what you're paying for Google, but maybe the market is fearful because of recession fears or whatever, advertising weakness and all that stuff. So maybe it's gonna go much, much lower. And this is very, very possible. But one of the main reasons why Google has been going down and there has been a lot of uncertainty is because Google actually lost the antitrust case over search, mainly claiming that Google has a monopoly in the search engine stuff. And I believe it's somewhat accurate. I mean, the company has 91% market share. 91%. Bing has 3.8%, which I believe is owned by Microsoft. And Yandex, which I believe is in Russia, they have 1.3% market share. But again, I mean, 91% for Google, it's absolutely mind blowing. And I understand why that happened. And from my research, I saw that Google pays Apple $20 billion annually, $20 billion a year, just for them to be the main search engine on Safari, which is in Apple phones. And they pay them $20 billion a year. Now, from my understanding, the most likely outcome of this case is that Google cannot pay Apple $20 billion a year. Now, this is bad for Apple because Apple is gonna be collecting this $20 billion. But now there will be a little bit more competition. So maybe Apple will decide to make its own search engine and put it as a default on the browsers in their Apple phones. That will hurt Google very, very much. Or maybe they have some kind of a deal with Bing, which is owned by Microsoft. But for me personally, I think if people have different choices, they will likely choose Google. I mean, everyone says Google this, Google that. Everything is like Google, whatever. Everyone says Bing, whatever. You know what I mean? And I just don't think that Bing is going to be like, it's just going to kill Google unless it's something was major with AI. But again, I just don't think so. People have been using Google. And I think if they have the choice, they will likely keep Google. And that's just what I personally believe. And Google won't have to pay this $20 billion, and Apple will collect $20 billion less. So this is not too bad. But one of the biggest risks that could happen is because of Android, because Google actually owns Android, and it puts Google as the main search engine within Google, within Android phones, I should say. And Android has a 70% market share worldwide. This is massive. And maybe the lawsuit will conclude that Google can't just put Android, say, or they have to split the company, or something has to happen. This is the worst case scenario. The best case scenario is they have to pay some fine, I don't know, 50, 60 billion dollars, which Google has 100 billion in cash. I mean, they have to pay some kind of fine, and everything just continues the same way. I mean, I wouldn't be surprised if that's the outcome. But if it's something within Android phones, they have 70% market share, that's going to hurt Google very, very much. So we don't really know what's going to happen. And it's causing a lot of uncertainty. But no matter how it really goes, as long as Apple doesn't create its own search engine, I think most people will likely use Google because they've been using Google forever, and they will likely keep using Google forever. And that's what I personally believe. In terms of the multiple of Google, It's now trading at 19.6 times earnings. And if you look at this line that I'm showing you, this has been historically a very good time to be buying Google at 19.6 times. The lowest it has went to was around 16.7, which was actually 2 years ago. In 2022, it went to 16.7 times earnings. Now it's trading at 19 times earnings. And on a historical average, this has been a very good time to actually be accumulating Google stock. And Google does have a very good balance sheet. They have over $100 billion in cash and cash equivalents. They do have some debt, but it's nothing crazy. They get paid off with the free cash flow. They can refinance it, but they have $100 billion in cash, and they can do a lot of buybacks if the stock ends up going down much lower, and they're going to create value for shareholders. But in terms of my valuation model on Google, I have 10% revenue growth for the next 5 years. It's pretty close to the analyst. The analysts have 11%. I think 10% is fair for something like Google. 10% is fair. I mean, they could do a little bit more. I wouldn't be surprised. So 10% for that. PE ratio, now it's trading at 19 times. 19.7 times. I put it in at 22 times. I think it's a little bit more fair. The mean has been 24 times. I think 19 times is extremely cheap for Google personally, but 22 times makes a lot more sense. So if I use 22 times earnings and a 3% shareholder yield, which is like a 2.5% buyback, 0.5% dividend, now they're paying dividends and it might go up, but around a 3% shareholder yield, in total, I'm getting around 84% on the upside, or pretty close to a 14% CAGR for the next 5 years on Google from this price. But if I decide to buy, Google, if I want to get a double on it, which what I look for, which is 15% a year or a double every 5 years, I would have to pay no more than $147 per share. And 147 isn't too far from the current price of 159. We were there like, I think 6 or 7 months ago. So I wouldn't be surprised if we get back over there. But for me personally, looking at everything here, I think Google stock could be some kind of a buy. It's offering good value, good balance sheet, everything is fine. We just don't know what's going to happen with the antitrust lawsuit. We don't know if they're going to split Android by itself or what's going to happen. And if they do split it, it will likely have a much higher multiple, I would assume. So it will be interesting to see what happens. But for me, in terms of the fundamentals of Google, I think Google is offering good value for the price. It doesn't mean the stock can't go lower. But again, I don't make those decisions betting on where the stock will go. I try to analyze the fundamentals, and if it makes sense, I buy it. If it goes down and the fundamentals are still the same or they improved, I buy a little bit more. And that's how I do it. And I like Google over here. And that's my opinion on the company or on the stock. It wasn't financial advice. I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.